real estate is highly exaggerated because most of these other investment alternatives to this real estate, people don't know it.
Is it wrong to borrow money to run business?
People saying that they don't want to borrow to do business, I can tell you categorically that they are not business-minded people. When there is poverty on the land, the rational thinking would be drastically low. In Nigeria today, the larger part of the population are the downside. So, and everybody, one way or the other, are looking for ways, quicker way to end the, to have the end means.
How do you build wealth?
As an individual, the very first thing you need to do when you know you want to build your wealth is, first thing, get yourself equipped. How will you equip yourself? Get education or learn a skillful work that can generate an income. Having equipped yourself, the next thing you need to do is look for a problem in your society to solve.
Welcome to another beautiful segment today. On this segment, we'll be looking at investments and also look at loan savings. Today, we have a financial educator that will enlighten us more about how we handle our finance. Make welcome, Anianajo Isiaka. Good to have you here, Anianajo.
Thank you for having me. My name is Anianajo Isiaka, and thank you, viewer, for listening to me.
Thank you for that introduction and thank you for coming around. This has been a section we'll be talking about different other financial talks, and it has really made waves in the internet space and the global space. We'd like to, share this experience with people outside there that want to make decisions when it comes to financial decision, when it comes to, savings, investments, and the like. A tree makes a forest, so if I have to put it that way, different trees make a forest, and it started from 1 tree to 2 to 3 and the like. I would like to, you started from somewhere, you built a brand over the time, over the year. You single-handedly built Anianajo. I would like you to share with us, what's the journey like? Where you started from and where you are now?
Okay, thank you for this fantastic question. I think if I'm not mistaken, this is the first time I'll be talking about how Anianajo actually started. The journey, just like other businesses, if there is no business, there won't be action. So Anianajo actually started around 2015. So, and the rationale behind it is that, as a key player in the market space. So around 2016, 2017, we happen to be one of the, agents, mobile money operators agents then. So, and if I'm not mistaken, we happen to be the only one operating at that space at that time. So what I observe is that at that time, people need to send money, people need to receive money. So we're providing this service for them. So then I discovered that the majority of people usually come to the market space, pitch trips, daily contribution for customers, and customer will subscribe to it. After 1 or 2 years, these people will be nowhere to be found. Will have run away with people's money. So one day, 1 or 2 people, market people, came to my office and they were like, talk to me, Afa, why don't you be doing this? These are the challenges we are facing in this market. So why don't you be helping us to do this? I was like, this, I don't have this time to drive this. So somebody came to me around 2016, somebody also came to me around 2017. It wasn't occurred to me, I've not seen it, I've not really think about it as this is a business, this is business. As in when people, pitch something to you, when people keep on hammering on certain things, meaning that there is something in that area. So when I got home around early 2018, I started thinking about it. So I now feel like, okay, for people to be clamoring for this at this time, meaning that they need it. So I now did some research. I discovered that for people to cultivate savings habits, they need somebody to journey with them. So because spending down is natural, you can easily spend the way you like. For savings, that has to do with a kind of deliberate act and a kind of practice, and people have to be disciplined. For people to achieve this, they need somebody who can journey with them to get this thing done. So when I discovered that people comes asking and they keep on hammering, so and I look, okay, look at it, fintech that would think that can assist us in getting this thing done and making it more seamless for them and get the work done. So that is why we have to partner with fintech and see how we can seamless and unify this aspect for them. And since that time, to God be the glory, the issue of somebody comes, run away with my money, do this and that, has become a thing of past. So one of the success we have achieved since that time is that people will now understand why they need to save money, because they know that savings is not something that is easily done. It is not done naturally. So you need someone to be reminding them of the need to remain of the need for them to achieve their financial goals. That person will be reminding them often and often, so that people will now get more committed. So people want to save, but one thing is not enough. You need to choose. Even choose is still not enough. To get themselves committed, somebody has to be there to serve as an accountability partner. That's what we do, and today we thank God that we are where we are. So people begin to understand what we are teaching, and they are achieving their financial goals.
I would like to ask this. You've done that. You've been able to dominate that area in terms of our job and the financial, industry in that area, related area. I want to know, as a financial educator, an entrepreneur, and also a business analyst, tell us what inspired you to be a financial educator.
I think in 2008, when I was doing my IT in one of the filling stations, I was working then as a petroleum attendant at that time. So during that time, I'm a kind of person that always think of the future. I don't get carried away with my present situation. So then, the little money I was getting there, I keep committing it. I keep saving it. I was saving till I finished my IT, till I return back to school to go and do my HND, and I thank God that I was able to raise certain amount of money and invested some in certain industry, so that will be generating kind of interest. Return on investment. So then I was able to gather certain amount of money to continue my education. In fact, in the bid to continue my education, I have to establish my first business, which is Ani's computer and educational consultant, from the savings I was able to gather during that time. So, and as I was saving then, as I was schooling, I was working, my business was moving. So when I returned back from school, to cut all the story short, and when I return back from school and get back to Lagos, I'm finding myself in the market. I listen to people. I look at some of their complaints. I interact with people. I look at some of their complaints. I discover that making money is never a problem for majority of our people. But the major problem we have is the ability to save that money, to secure certain portion from that money. You will see somebody who is doing fantastically well today, and in the next 3, 4, 5 years, the person will go broke. If you find out, that means that the person will have made 1 or 2 wrong decisions. So, and the person makes wrong decision because that person did not properly plan their finance. People, majority of them will be carried away by what they are making today without minding of tomorrow, next tomorrow. When I wanted to start my own business, the little money I was able to gather during my service year, the little money I was able to gather when I was doing IT, the investment I did, the little money I was able to gather when I returned, when I was working, because I worked for 1 year, I have to gather everything together and, start my business with it. So, because I thought of 2013, in 2008, it made it easy for me like that. So, I was now like, okay, majority of these people that are complaining, that have got broke after they have done well in their own early stage of business or life, what is the reason? What actually caused it? So I saw that because of mismanagement of their fund. So as a result of that, I was like, okay. And at the same time, I'm already, operating as Ajo. I'm managing Ajo, Anianajo. So I have access to people. People come to me. People seek advice from me. During our interaction, I discovered that people don't plan their life at all. It is all about what they are getting now. And as they make that money today, they spend it and they furnish it. At the end of the day, if where they are getting money, if anything happens there, they got broke. So that is major reason why I think it is high time that I start talking about this, do this financial, so that we can properly guide people. You don't need too much money to start planning for your future. When you make money today, certain portion of that money has to be, saved. Certain portion of that money has to be invested. Certain portion of that money has to be. So you have to properly plan your finance so that you will not at any point in time go broke. Because the beauty of life is that the life you live today, you live in the next 5 years, and you live it when you get old. That is when you have it. But in a situation whereby you are enjoying today, at the middle of your time, you got broke. Of course, once you have tasted money, you know what money is all about, and you got broke in the process. That thing will cause depression for such person and will kill that person in time. So that is one of the things, number one thing that makes me so okay. At this time, we need to start counseling people on how to plan their finance, talking about their short-term planning, medium-term planning, and long-term planning of their finance, so that you'll be able to live the life they desire today, tomorrow, and at the rest of their life.
All right. So on the notes of living the kind of life they want to live, you said it's they should have their medium planning, long time, short planning, which is very key. You understand in terms of how you manage your finance. This is an opportunity for people to learn from you, for the benefit of those that wants to get this kind of knowledge beyond where they are getting it now. What plan have you made outside there for them to reach out to you?
At Anianajo, we are not only telling them to save money. What we do is that we work with them to build their, investment portfolio. Okay, for instance, you do daily contribution. That is commitment for you to achieve a kind of short-time savings plan. So at least your daily contribution is money that you can have access to at any time.
Yeah.
And then, do whatever you want to do with it to achieve short-time something. So we believe that if you can commit yourself to save for 1 month, you can actually save for 3 months. You can save for 1 year. Then you can start investing your money for the next 5, 10, 20 years. What we do is that when we see that yes, you have saved up to 500,000 naira, we will call you, talk to you. What is your plan with this money? So we will now sit you down and begins to show you the kind of investment portfolio that you can start putting this money into, so that this money will begin to generate a return for you. Because one of the things I observe is that people think that you need big money to invest. I do tell people that you don't actually need big money to invest. You can invest money in two major ways. Either to invest in lump sum, or you invest in terms of annuity, whereby you will put in something somewhere small. Lump sum means that okay, you have huge amount of money, you put it into an investment once, let this one start running for you and generate a return for you. Why annuity means that there is a spread. Maybe there is a spread, maybe every month or every year you want to be paying this also amount of money, you want to commit this also amount of money for so number of years. Those that are working, that are paying pension, sometimes they deduct their pension plan from their salary at the end of every month. That one is a form of annuity. So individual who is not into a working environment that can also do that, have this kind of plan. So we advise them, then we introduce them to where these ones can be achieved. You put 500,000 naira somewhere. That 500,000 is generating around 20% interest rate for you in a year. So that 500 in 10 years, automatically it will become 3 million naira. In 20 years, that 500,000 naira will give you roughly 20 million naira. So now thinking that this 500 naira is too small, I cannot invest this money now. So, and you just squander that 500,000 naira. So that 20 million naira that one will give you in the next 20 years, how you get it? And one of the things you need to contend with is that in Nigeria, especially those that are not really have that higher level of education, if you are talking to them about future, they are only understanding two things about future: their children and real estate. When you are talking to people about this, they find it so difficult to understand that this thing can be achieved with little amount of money committed on a monthly, on a yearly, on a weekly, or on a daily basis to achieve this. So these are the things we put in place to ensure that yes, we pull people out of poverty. And our office is always open Monday to Friday, and my social media handle is also there. People come to my DM, of course, they ask questions, then I answer them. So some people who deserve to have my phone number, after that conversation on DM, then of course I list my phone number for them, then they contact me, then we mentor them to ensure that yes, they achieve their financial goals.
You mentioned something about real estate, so I'd like to say something about that, or ask you a question about it. You said one thing in one of your videos that there's no business without underlying risks. And it's me asking this question, that what about real estate business? Because you see, like a lot of professionals or well-known people in the real estate talk so much about real estate that it's not a business that comes with risks. So what about real estate business? What can you say to that?
Yeah. So thank you. When somebody is speaking something for you, they want you to do what they are preaching for you. Most especially when you are listening to a salespeople will do everything possible to convince you, so that to get you involved in what they are preaching. There is no that business on this earth that doesn't come with underlying risk. The only business that is a lesser risk, is not totally risk-free, but we can term it as risk-free business, is maybe when you buy government security, talking of treasury bill or government bond. You understand? So it is lesser risk and risk, and they call it risk free because it is a government. Government have the ability to print money, and they also have the ability to tax people if things go south. You understand? So as a result of that, it makes your capital to be more safer and getting your return as promised. So, but talking of other businesses, so we will be talking about, okay, there are like the real estate you just mentioned. Real estate has its own underlying risk. Okay, it now depends on how you play in the real estate. Do you play for capital, acquisition, or you play for the cash flow? When you play for capital acquisition in real estate, meaning that, okay, you want to buy land and just sell it without you building anything, without you generating rental income. Or when you are building for generating the cash flow, meaning that you build to generate the rental income. So each of these ones have their own risk. For instance, you build for capital acquisition. You've done your projection. This is how much you bought. You bought your land. You've done your projection. During the construction, the town planning, or this agency they come. They said what you did is not this is how you're supposed to do it. They ask you to break it and do it again. That is one risk. The risk of legal risk, the land you bought, if at the end of the day something happens and then that land is not really genuine. You understand? You bought that land and the land is not genuine, automatically there's a possibility of revoking that land. Both land and everything you do on it, what happens to it? Gone. So that is another risk. Inflation risk is there. The situation whereby you build house down like this. As you build house down, then you are expected to sell it at this also amount of money. Selling at that amount of money. So after you have committed the money, so the money did not come on time. And at then when that buyer comes, the value they bought it, they cannot even be quantified to the value you incurred on that particular property. That is another risk. Then we'll be talking about the liquidity risk as well. What is liquidity risk? Liquidity risk means that the property you built and you want to sell, it's not like pure water or that thing that can be easily sold. It can be on ground for the next 2-3 years without you seeing the buyer for it. Automatically, your money has already stuck there. So until you sold it before you can generate your money back and do another thing. So those are the risks and some other risks like that are associated with real estate when we are talking about it for the capital acquisition. So, but if we are talking about the rental income, so although when you do it for rental, that one generates income for you in two ways, on both capital appreciation and the cash flow. The cash flow means that the rent you are getting on a yearly basis or monthly, it depends on how you schedule your income. The other risk we talk about the capital, something also associated with it, talking about the liquidity risk, talking about the inflation rate risk, talking about any risk that associated with other businesses, also associated with real estate business. There is no business without its own underlying risk. The worst of it is that maintenance risk on rental something. There is no how somebody will live in your house for the next 3 or 4, 5 years without you spending money, to start spending money to maintain that house if you still want to maintain that value. Depreciation risk is still there. It's only land that appreciates, but the building depreciates. So every year and year and year. So those are the risks that so there is no risk, there is no business. You cannot do business. Any business that they are telling you that this business does not have underlying risk, know that is a lie. So those people only want to sell to you. They want you to buy what they want to sell. So that is why they are telling you that.
Fantastic. Thank you for that response. Is it wrong to borrow money to run business? You understand? Because I've seen so many situations whereby people say they want to grow at their pace, like whatever money they have, they want to use it till they get to that certain stage. They feel okay, they have scaled up?
So as an entrepreneur, one of the things you need to add to your load whenever you are going into entrepreneurship is that your responsibility most time is to conceive the idea and think of how to raise fund to make the idea realistic. People saying that they don't want to borrow to do business, I can tell you categorically that they are not business minded people. You need your own money to start business, but you need external money to scale up that business.
Mm.
Can fund your business in two major ways, either by equity or by debt. Equity financing means that you have done the business to a certain extent. It has gotten to the level whereby you need to pitch it to people. Those people you want to pitch it into, you want them to come in as a shareholder, to come and partner with you directly, so that when you make profit, you share it together. When you recorded loss, you share it together as well. That is equity financing. Why the debt financing is that, oh, you've done this business to a certain extent, and you now want people, you need money to scale up, to move to the next level. And there is no how you want to can scale up without you leverage, and no how you will leverage without without you using debt. That is why they call every company that is on debt, they call them a levered company. So meaning that you need either equity financing or debt financing to scale up your business, for that business to get to where it wants to be. So one of the challenge we have with some of the entrepreneurs is, from throughout my conversation, is that I don't want to borrow money. The bank stress is too much. This and this and that. The interest rate and all those things. I was like, oh, the interest rate is too much. It's a business you want to use this money to do, of course. Why those people too? They are into business. So it's a win-win thing. Oh, they give you money, maybe at 35% interest rate, because that is the prevailing rate in the market today. So you know that from this business you will make 60 to 70% return on it. What is your big problem of by not giving them your something back? What do we mean by leverage? You have an opportunity. Take for instance, you have an opportunity to supply something of 1 billion. The total money you have is no more than 100 million naira, and you need to supply this thing upfront, maybe before they will give you your money back. So you approach bank finance that money for you, that business for you. So by financing that business for you, they also need to get something from there. So one thing that people don't know is that there is no money, no single money in circulation without its own cost. Every money has its underlying cost, either absolute cost or opportunity cost. So there is no single money that you see out there that doesn't have cost. So anybody that is giving out his or her home money to you automatically has sacrificed something. So you need to also need to pitch something back in return to ensure that this money remain in its value. So, and I used to tell people that the cheapest way to run business, the cheapest mode of financing business is debt financing. Is through debt. If you cannot borrow money to do your business, you have not gotten to the level where they can call you a business person. So your responsibility is that, yes, I am doing this business. I need 100 million. I need 200 million. I need 300 million. I need 4. I need 5. I need 1 billion. You can easily have it within short period of time. That is when you can say, okay, now my business is now ripe to be, scale up. That is even one of the major reasons why many small businesses die prematurely, because majority of them don't understand how to make use of debt to scale up their business. Debt financing, there's nothing bad with it. It is a very cheap way. It is an easy way to leverage. It is an easy way to scale up business, and it is the best way to finance.
Very fantastic. Thank you for that response. Debt financing, it's the best way to finance business. It's the best way to run business. You've heard it from Anianajo. What is the best investment option be it stock, fixed income, which will you say is the best investment plan or option people can key into?
Okay, between fixed income and stock share. Stock means shares. So as a financial analyst, my advice, I can only analyze the business, the risk associated with each and every one of these business for you. As an investor, it is your responsibility to choose which one you want to choose. Because if I say this one is the best now, and it's not aligned with your home person, we have different type of people with risk, level. We have risk averse people, we have risk, neutral people, then we have a risk lover people. So if based on my own analysis, I told you the risk associated with this, and I told you the reward that associated with it. You as a risk averse, you think that, oh, this business does not expose me so much to the risk. So what can I do? So you can choose the one that is lesser risky. If you are a risk lover, and of course, you know that the more the risk you undertake, the higher chance of reward that you will gain from that investment. So if I tell you that go for an investment that is lesser risk, meaning that I am clean your risk appetite. So of course I don't have that responsibility. What I have to do is I will sit you down, analyze to you, this is the underlying risk that are associated with this, and these are the factors that determine the risk in this business. Why this one? Okay, take for instance, fixed income. We'll be talking about, when we're talking about fixed income, we have it in different ways. We have it in both money market and capital market. Fixed income in money market, we'll be talking about treasury bill, we'll be talking about commercial paper, short-term bond, fixed deposits, and all those things in a money market. All the investment that is, that can mature within 1 year are the one within money market, market. So, but when we talk about the capital market, we'll be talking about, equity, which is stock. Then we'll be talking about bond, long-term bond, debenture, and all those things. So now, as a financial analyst, if you come to me and say, okay, I have this amount of money, I want to invest it in fixed income. Okay, which one can I invest into in both fixed income and so I will look at the economic trend at that particular time. What is happening in the industry? What is the mood of the government at this time? What are the industry that this thing actually affected? Okay, take for instance, like what is happening currently. America and China trade war. The America is putting on every country. You may think that that trade war only affected America, but it has impact on every country. Automatically, when something has impact on a country, it affected their own stock in that country. So now you will see that the stock index are the downward trend at this time. Of course, for your risk profile people, that the fact that the stock index is at the downward trend, that shows that for a risk profile people, that could be an opportunity. Because of course, take for instance, you go to market, you want to buy pepper, and you see pepper where it is high, when it is high, and you see when it is low. Which one will you buy? You of course buy the lower where it is low.
Sure.
So of course that is the same thing applicable to the stock. Now the stock is at the bottom end. So for a risk profile, people will think that okay, with this, if I can buy from here, good for me. It will start appreciating. Well, that is of course that is what most of the investors, that's what most of them do. So we also analyze this thing to you, then from there you cannot decide which one to go in for.
So I like on the note that you started, that's a smart one to say I will just advise you on this advices. So it's not left for you to look at some of the risks and some of the reward there and make your choice. So I would also like to also ask
fixed deposit and real estate. As an expert in investment, if you have to advise somebody, or if you have to tell people about the risks and the reward involved in fixed income and real estate, what would be your advice?
It depends on your stage in life. For me, I don't really. I saw real estate business as something that is being overhyped. So because when you look at the return, especially the rental one, when you look at the return compared to the capital invested, you will see that it is not really hard up. Okay, take for instance, I gave you the instance of 500,000 naira last time. That 500,000 with 10% interest and with 20% interest rate will give you 3 million naira in 10 years. I get what I'm saying. I said in 20 years it will give you almost 20 million. That is 19 point something million naira. Are you getting me? Now think about it in 40 years. So it will have been about 100 million naira. Are you getting what I'm saying?
Yeah. Okay.
So just 500,000 naira continuously compounding for the next 20 years will give you 20 million naira. So, but before you invest in business, as an investor, as an investment analyst, 3 things I used to look into. The number one thing I normally look into is, what is my payback period? What is that? What does that mean is that when will I recouple my own capital, the money I want to invest in this business? How long will it take me to get it back? I don't know if I'm communicating.
Yeah.
How long will it take me to get my capital back? I need to understand that fact very, very clearly. That is number one. Number two is, I want to know the risk involved in the business I am venturing into. What are the underlying risks? Could it guarantee my capital, the safety of my money? I need to understand. I need to be sure about it. By being sure about the safety of my money, meaning that I have to understand that, okay, this is the risk that I'll share with you. So as a result of that, I think I am okay. Then I need to know the reward. How much will this be fetch? How much will it be fetching me at the end of the period? So, having understood these 3 things, I think from there I can decide. For instance, you invest 500,000 naira at 20% interest rate. In less than 3 years, you get your money back. You build a house of 100 million naira. You get maybe 5% on that 100 million naira every month. In 20 years, in the next 20 years, there is no possibility of you getting your capital back. I will understand, I will analyze all these things to you. It is now left to you to know that, okay, which one will you choose? Because at the end of the day, what you want is money. So now it is not by saying you have this house here, you have this house here. No, it is the money that is coming in. Your ability to make money, sustain that your lifestyle, something that will sustain your lifestyle today, tomorrow, and the rest of your life. It is what you need. So when you know you have investment that will give you your capital, your return back, safe investment in the next 3 years, and you have another one that will give you your capital back that is not likely for you to get your capital back in the next 20 years, which one will you choose?
The other one.
As for me, that's why most time I believe real estate is highly exaggerated. Because most of these other investment alternatives to this real estate, people don't know it. And as people don't know it, it makes them to like struggle to build. In fact, when you invest in a probably mutual fund, you invest in money mutual fund that is giving you stable return every year. Some of this money can be compounded daily. And if something is being compounded daily, you cannot compare the interest rate with the one that is being compounded monthly. You can't compare with the one that is being compounded annually. So when you have something that is being compounded daily, and you know that, yes, you are so sure that my 5 million naira today, in 10 years, it will give me 30 million naira. In 20 years, it will give me 200 million naira. So, which house can you build with 5 million naira in today that will fetch you even 500,000 naira every month without you having land? So, and these things are all out there that is real. But people don't know because It is the elite that understand all this, and they don't talk about it to people who doesn't understand. That is why you see people struggle. So people, because they want to even build house for rentage, they will even lose the business they are doing, because they are looking for something that will be giving them. You can see in Lagos, the majority of Lagos landlords are broke. If it is that, lucrative, why are they broke? And I can assure you, I don't think they have this money. I listened to one of these man interview, Osibajo. Osibajo said, I don't disturb myself on building houses. He has his money in stocks. He has his money in fixed deposits. He gets consistent what? Cash flow every year in billions. But people don't know. Look at Otedola now. Why Otedola is buying shares everywhere? That is what that is what the rich people, that is what they do. It is those that are coming, and because of people in the real estate, the way they hype it, everybody will fall for it. Real estate is not something you do when you are still struggling. Build your wealth. When you begin to make this money, at the end of the transition, you can now say, okay, let me go back to this residence and start secure this thing down. So that is my own, something. But as a financial advisor, what I do tell people, based on your own stage in life, is that we look at you, then we build a portfolio for you. In your portfolio, we have different type of stock there. Portfolio is just like a combination of different investment options. Talking about fixed deposit, even real estate. You can do real estate through REIT by buying stock of real estate, or buying land. Then you can also we look at the equity as well. And in the equity, we have different type of equity. We have a protective equity. We have a blue chip stock. We have a risky stock. We have all these different type of stock that we combine them in your portfolio. Then we now begins to weigh the portfolio performance. So it depends on your stage in life. If you are still young, there we determine what we do for you. If you are already old, we determine the kind of advice we give you on your investment plan.
All right, thank you, Anianajo. I would like to ask this question. Can we address some of this issue, the issue of Cebex? Nigerians, continue to fall to this Ponzi scheme, and we've seen year in, year out, and this is another big disaster in terms of finance in Nigeria. Why do you think Nigeria won? Why do you think they keep falling into this? And is it that there's no enough awareness outside there? The government claim that they've done a lot of awareness, but Nigerians don't want to listen to it. And why is it that? Because I've also heard information about, world influential people outside there, knowledgeable people also falling into the trap of Cebex. What do they do this time around, and they were able to, trap a lot of people into this? And what do you think government should also do about this?
Okay, about the Cebex issues, I think I have addressed this on some of my videos on my Facebook page. Um, I'm empathize with people who fell for it, because they are human beings. So I empathize with them. They also try to, it's a matter of them trying to make money and get rid of, poverty. So, which is exactly why they were able to be trapped into this plan. So what I'm saying in essence is that, you know, when there is poverty on the land, the rational thinking would be drastically low. So, in Nigeria today, the larger part of the population are the down side. So, and everybody, one way or the other, are looking for quicker way to end to have the end means. So when they come with this kind of, platform, because before I can judge, I need to understand. I look at the app, and I discover that this app is being designed in such a way that even if you are an expert, you will hardly know that this is a Ponzi. Because if we are to look at the attribute of Ponzi, Ponzi doesn't have an underlying product that they are selling. But this time around, they come up with an underlying product that, okay, we are trading crypto. As we are trading crypto, of course, we all know that people can make money from crypto. Making 2%, 3% from crypto in a month, in a day, shouldn't be a problem for those who play at that, area, who understand it very well, even in forex. So to make 2% of your capital on a daily basis shouldn't be a problem. So it is through this they trap people. They say people will make 2% of their capital daily. It's not that they say, come, invest 500, you get your 500 back in a day. It's quite different from how. So, and this trend continue like that. And you can see some terms they are using: put, call, parity, all those terminology that they use in advanced financing, in a derivative market. Those are the things they actually use. So of course, even if you are a financial expert, you need to have a contentment that, because I don't know the person that I'm trading with, for that reasons, I won't want to trade. But talking about organized crime, these people are so much organized. So as a result of that, people fell for it. But above all, what I can discover, what I see the most, is that the level of financial literacy is too low. So that is why I think it is high time that all hands should be on deck for those that are, high, that have high knowledge about the financial literacy and financial experts, to start pitching this. When people don't have fear or worry for money, they don't have reasons to rush and jump into everything they see. Once you have a systematic way of how you grow your own growing financially, so automatically you will see that, what am I actually looking for? What I'm looking for, if I didn't have it now, provided that I'm consistent in what I'm doing, automatically I will get it in the next so years. So because there were little financial literacy, just some people who play in this area are not really experts, because they don't know. They are only seeing, once they read one or two books, they think they have arrived as a financial expert, they start talking about it. But it's because they don't know, and they don't even know how to put people out to actually build their own passive income portfolio, because that is the essence. Everybody wants passive income. Of course, everybody deserves passive income, because no matter what you do, if your passive income is never grown above your active income, you have not gotten there. That is just the meaning. Until your passive income return can sustain your standard of living, that is when you can say that, yes, I have arrived. So once you have, and we advise people, continue building this, continue working on this, continue doing this, continue doing that, like that, and it's growing that way. I think with that, as time goes on, people will be learning. As time goes on, people will no longer fall for this. So it's already come. People have seen it, and people have already learned their lesson. Just of people who learn through MMM will have be skeptical when this one comes. So people who learn from this as well will have also be skeptical. If another one still come, even if they attach it with product, they will ask further questions. Who are we trading with? Where is this insurance? What are the guarantee that this thing is going to, our money is going to return? This and this and that. Then when they tell you that something has no risk at all, that thing itself is a risk.
But Anianajo, I would like us to look at it in this perspective. In year, out of the year, in the year, next year, 2 years, so many times there have been information that such things also happen. You mentioned the case of MMM. There are a lot of people that have also been part of MMM. You also see they are also part of the Cebex. Because You also said earlier that it looks so beautiful that it looks like the likes of the cryptocurrency, the likes of Ethereums and the likes of it. But you still see a lot of people still falling into it. Is it that there's no enough awareness outside there for people to keen to and learn from?
I can say that there's not enough awareness, but at the same time, MMM happens in 2016, if I'm not mistaken. If I'm not mistaken, before this time around. So that is 20, about 10 years, after the incident of MMM. And you should be aware that some other little Ponzi also came actually before this one, but they are not that popular like this. They are not popular like this because those ones are not really coordinated. That's why I told you that this one, you will hardly know that this is a Ponzi. That's why I don't blame those that did it, because it doesn't come in form of Ponzi at all. So now, when I say the awareness needed to be created, we need to be contented and understand that anything we want to venture into must be, when it comes to investment, must be something that is originated in our country. And then the sector that regulated the investment space, which is Security Exchange Commission, must be, you must be aware that this thing, it is being regulated by them. Through that, people will hardly fall for that. So above all, the awareness about financial literacy, we need to continue pitching it, so people will be more informed, will be more educated. Then when they see a red flag, we need to tell them what are the red flags, that this, if this thing comes in this way, it is a red flag that you need to like run away from. Don't fall for it. And so it is all about awareness, it's all about information, and it's all about education.
What are the fastest routes to build wealth?
Okay, building wealth is systematic. It has step and it has principle that govern it. You understand? As an individual, the very first thing you need to do when you know you want to build your wealth is, first thing, get yourself equipped. How will you equip yourself? Get education or learn a skillful work that can generate an income. Having equipped yourself, the next thing you need to do is look for a problem in your society to solve. I told you the reason, the rationale behind Anianajo, when people are falling for people, scam, and all those things, we come on board. It's a problem. We come on board and we diminify that space. You understand? Once you have a knowledge, the next thing is look for a problem that you use that knowledge to tackle. That is number 2. Number 3 is you start building a saving culture. Of course, you've already had education. Of course, you've already have skillful. You are already skillful, that you can do something, that you can use those knowledge to solve problem. The next thing is build. Once you solve problem, as you are solving problem, automatically you are getting money. There's a saying that if you want to be great in life, automatically raise your energy. Once you raise your energy, the energy you raise will attract people to you. When they show up, the next thing is you build them. So you first of all raise your energy, because they know you can solve problem, you have value. The next thing is people begins to come to you. People will begin to meet you. So after people meeting you, the next thing for you is you build them. That means that you charge them for your service, you generate money.
All right, thank you. I think we will be rounding up now. I would just like to ask if there's any area you need to just mention, if there's an advice you'd like to give, and also use the opportunity to tell people that also wants to reach out to you. We said that earlier, but we'd just like to talk about the laboratory.
Okay, thank you so much. We said it all since morning. So I like what I said during my conversation here today. I said that everybody wants to be rich. Everybody wants to have financial freedom. Everybody wants to be on top of the game. So, but one thing is never enough. The next thing is you need to choose. Once you choose, you've already synchronized it to certain levels. You have already choosing means that you've already killed other alternatives. Mean that you choose that this is the path I want to take and this is what I want to achieve for myself in life. You understand? So after you have chosen as well, it is still an intention because you have not really committed yourself. The next thing is you need to get yourself committed. Building financial freedom is all about commitment. So little effort on a daily basis, it makes difference at the end of the day. So and thank God that is the essence of we at Anianajo. We are not only ask you to save money, we guide you on how to manage your spending, we guide you on how to save your money, we guide you on how to build your investment portfolio, then we network you to the business like mine, whereby you people can flow together, talk together, and understand the business dynamic and grow to get to where you want to be together. Of course, we still guide you on how to grow your business, consult for you on how to get loan, affordable loan, not those loan you get and be paying 100% per annum. No. So we do all this for you. So to reach out to me, go to my Facebook page. I mean, DM us there, then we'll be able to attend to you. Then you can also call me on my phone number 080 32 76 93 79. Thank you. You can also check us on TikTok. So we are also there. So from there, once you DM us, then we'll respond to you. Then from there, we can begin the conversation. Thank you.
On this note, we draw the curtain and we say thank you for being part of this section. I still remain Hayotunde Ogubono.